Hello, everyone, and thank you for tuning in to this segment brought to us by our good friends at Simsbury Bank. I'm Ann Baldwin, and I have the pleasure of joining you on this program today where we're talking about a fairly new, affordable health savings account product called HSAs. It's growing in popularity, and many employers are now offering this in addition to tax-free accounts for retirement and college savings. For many, there is now an option to establish a health savings account. This is used to cover any medical bills, and it's all tax-free. And with us here today to talk about this is Terry Boulton. Terry is the Senior Vice President and Simsbury Senior Market Manager of Simsbury Bank and Trust, and also Joe Spurgeon. He is an associate with health consultants for Lindberg Ripple, which is a financial services company based in my hometown of Windsor. So thank you both very much for being here. Terry, it's great to see you again.
Pleasure to be here.
So we're back here talking about health savings accounts. Now, we've talked about these before, but with all the changes in healthcare, all the uncertainties, from what I understand, HSAs are becoming more and more popular. So I'll turn to you. If you could first define what an HSA is in the first place.
An HSA is just one example of what we call a consumer-directed health plan in the industry. And consumer-directed health plans combine a medical plan with an upfront deductible along with a funding vehicle. In particular, an HSA, a health savings account, is a tax-advantaged funding vehicle that you can use your tax-advantaged funds to pay for your medical expenses. So money can go into these accounts pre-tax, and they come out tax-free if they're spent on medical expenses.
And when medical expenses add up and you have that tax-free option, that would be, I would assume, a huge savings in the end to the consumer.
Oh, yeah. I mean, if you're in a 20% tax bracket
Right.
and you're spending $2,000 or $4,000 on a deductible, that does add up.
So Terry, you and Joe are kind of a tag team. What is the relationship between Simsbury Bank and your company, and you actually go out and educate people about the benefits of HSAs, correct?
Yes, we're very fortunate to be partnering up with Lindberg and Ripple. We've been doing this for probably 5 years now. And Joe or any of his teammates will contact me when they have a company that they want to offer a high deductible plan to. They ask me, along with the insurance providers, to come in and talk to the consumers, the employees, to help them understand how the program works. It's very different than many other medical programs where there's a deductible that they're responsible for. There's tax advantage features through the HSA account, and Joe partners up with us. We go in and talk to employees and help them understand how the program would best benefit them.
Let me ask you this, Joe. Is anybody eligible for an HSA? Is there any criteria, or are there any guidelines or qualifications? How tough is it?
Yes, the IRS does put some requirements on it. So in order to establish an HSA account, you must be enrolled in what we call a high deductible health plan, as defined by the IRS. We call them HDHPs in the industry. An HDHP must have a deductible of at least $1,250 if you're enrolled by yourself, or $2,500 if you have at least one of their dependents. So if it was you and a spouse or you and a family, you'd have a $2,500 deductible. Although the most common deductibles that we see here in the Northeast are closer to $2,000, $4,000, or $2,500, $5,000.
All right, and let me ask you this too. So how does it work? You know, and maybe Terry, I'll go back to this with you, but a lot of people already have their own banks. So you offer the service at your bank regardless of where you bank. You can open an HSA with Simsbury Bank, correct?
Yes. The HSAs are totally separate from your own bank account. It's a checking account, just like your checking account you write your normal bills through, but it's a tax-preferred account, tax-advantaged account, like Joe said, where monies are put in pre-tax, or they could be put in after tax, but they're put in as a tax-advantaged account. They can be anywhere. Actually, we opened up accounts even out of state, but they can be customers throughout Connecticut. They don't have to be customers of ours, although we'd love to be the relationship bank. But and many customers, once they become HSA customers, also become other service customers of ours. But they can open up the account. Many of them will go to the location, so it's convenient for them to bank with us and explain the program, accept deposits. Sign them up for direct deposit, and it's a totally separate account other than their normal banking account.
And that was my question. So is it usually an automatic payroll deduction? Because I think one of the things that consumers have problems with is, taking that money away, paying themselves or putting that money into those accounts because, things get tight. So how does that work? Where does the money come from, and how disciplined does the consumer have to be to make it work?
Most popularly, it's payroll deducted. It's the easiest way. It's the easiest way for the employer to deal with it, and it's the easiest way for the employee to have it taken care of. It comes out pre-tax out of their payroll and gets directly deposited. So that it's just every pay period it goes into their account. The money grows. They can look at their accounts online, make sure everything's going in properly. But normally, it's payroll deducted. They can make deposits outside of payroll, and some do, but then they have to declare on their taxes to get the tax advantage portion of it.
And Joe, is there a maximum amount that you can contribute to your HSA on an annual basis?
Yes, every year the IRS does set limits to how much you can put in any one year. So this year it's $3,250 for single coverage.
$3,250?
Yes, sorry, $3,250 for single coverage, and $6,450 for other than single, so two-person or family. And that will index typically every year, so that's going up in 2014. The nice thing about that, though, is that's just an annual contribution limit. One of the things about the HSAs is funds will roll over year after year, so if you don't use all the money in your account, those funds stay in the account. They're not like the typical flexible spending account plans that people might be familiar with, which if you either use it or lose it terms.
Right.
These funds will roll over year after year. That annual contribution limit is just that. It's only a contribution limit. So you could actually put in another $6,450 next year, whatever the limits are going to be. So there's a limit to how much you can put in any one year, but there's no limit to how large these accounts can get. After rolling over year after year, at some point, these accounts do turn into deferred tax plans as well. So if you turn 65, folks are able to access funds for medical purposes tax-free still, but they could actually also withdraw the funds for non-medical purposes and pay a deferred tax rate on it.
In addition to the maximum allowable amount each year that the IRS establishes, if you're over 55 or older, you can put an additional catch-up each year of $1,000. So that's another good way to grow your funds for future use.
Is it an interest-bearing account?
It is. The checking account is interest-bearing, and then if you're growing funds in that account and you want to maximize the interest, you can also do HSA CDs with Simsbury Bank, and we ladder out CDs for you and give you a bump-up rate on those CDs.
So let me ask you this, Joe. Why is this an advantage for the employer? Is it just taking kind of the onus off of them to have to provide the benefits and more onto the consumer, as I kind of see the trend going in this nation now, that we have to be more self-disciplined and take care of ourselves because not everybody else is going to do that?
Yeah, there's definitely a portion of personal responsibility here that these plans try to drive off of. In the beginning, I said these are called consumer-directed health plans, and we call them that for a reason. The idea is they're directed at the consumer. So what we find is folks that have an upfront deductible will utilize the plan differently if they just have a smaller copay. And what we see with these types of plans is that we see a lot more generic drug utilization versus brand name drug utilization. We see less ER visits, which to some people that sounds scary, but what it means is people don't go to the ER when they have a sore throat anymore. They might use a minute clinic or something like that. So for the employer, what happens is the cost gets reduced. The premium cost for these plans is typically less than a copay-based plan. And that's where the employer really benefits.
Terry, when you go out and you do presentations together and people are sitting in your audience, what are some of the primary questions that people have about HSAs?
How it's funded, that's the big portion. What happens if I don't have enough funds? How do I keep track of my medical cost? How do I pay my bills? What vehicles can I use to pay my bills? So those are the things that we cover. The tax advantages of these accounts. Those are the things that most people are interested in finding out about. How can I best maximize my savings by utilizing an HSA?
And what about, it's not just for medical costs as we traditionally think about going to the doctor. It also covers other costs as well, which I thought was kind of a unique perspective.
HSA funds can be used for any qualified medical reason as designated by the IRS, and those are reasons: medical, dental, eye care, long-term care reasons. Some premiums later in life. But all of those funds that you use out of that account don't necessarily go towards your deductible on a high deductible plan. So the insurance is one aspect of it, and this is what some people have a hard time understanding. And the checking account, the HSA, is another aspect of it. They don't talk to each other. They don't keep track of each other. So the high deductible plan has a deductible amount that you have to reach before the insurance pays for their portion of it. So you have to make sure that you always have enough money in your account to cover your liability for that deductibility. And that's where people have a hard time sometimes understanding.
And we're talking again with Terry Boulton from Simsbury Bank and also Joe Spurgeon from Lindberg and Ripple Benefits. Are there any downsides, Joe, to this? Is there any reason not to open HSA?
Well, I think the downsides are, you need to carefully plan. So if it's an employer-based plan, typically the employer is driving what the plan design, what those deductible levels will look like. And they're doing that with budgetary considerations, but also with their employees' ability to pay considerations. If you're an individual looking at an HSA account, I think you need to carefully weigh the size of the deductible and whether or not you can afford that deductible. When you're looking at an individual plan, the higher deductible, the lower just like your auto insurance, right? The higher deductible, the lower your premiums will be. So you just need to weigh all that into consideration. But if you had a large plan with a large deductible, that is the patient's, in this case, liability, and they need to be able to afford to pay that. So that would be the downside, just making sure that you can financially afford to absorb the deductible. In order, if you do in fact go to the deductible.
Right, and I think, I can speak to this from personal experience as a small business owner with a large deductible. To know that I have that little nest egg sitting there, and if I, need to fulfill that, deductible before everything else starts to kick in, there's got to be a sense of comfort in that, knowing that it's there, and I'm not, scraping to figure out, where to come up with those funds.
Right.
Yeah. Typically where you'd start is you'd look at the premium for your normal regular copay premium, and you look at your high deductible plan and see what the difference in those premiums are, and at least put in the difference.
Right.
I mean, that's really what the philosophy is behind all this. You're taking ownership of managing your health cost by taking that difference in premiums and putting it aside so that you can pay for those deductibilities later on.
And some people's deductibles are pretty high, right? But then they don't, spend as much in the end, right? So it's something that you really have to, there's no cookie cutter approach to this, I wouldn't think.
Correct. And careful, one of the things that we do for our employer-based groups is we really design the plan design, what those deductible levels are going to be based on their current offerings. And so we try to do exactly what Terry was saying, create a plan that even though we're going to a large deductible from a copay plan, isn't overly burdensome for the employee. So the employee can kind of understand that I'm going to save X in premium out of my paycheck, that's going to absorb some of this deductible, and I would have had copays under my old copay plan anyway, so that's going to absorb another portion of the deductible.
Has there been any pullback that you've seen when you're face to face with people about, why am I having to do this as the employer? Isn't this why I work here? Shouldn't this be part of my benefits program? But like I said at the beginning of this program, everything's changing. I know it's a question, but a tough question, but
There's definitely a learning curve with this. I think initially there's a reaction of, wow, this huge deductible. And so once they kind of get beyond that, the participant, the employee, they start to understand there's a financial aspect to this. And what we do with the help of Simsbury Bank is we do a lot of training with employees, and we want to make sure they understand all the aspects of the plan, not just how the medical plan is going to work, but what's it going to cost them out of their paycheck and how much they can afford to fund into the account. And to Terry's point, the more you can fund, the better, in the beginning especially.
Mm-hmm. Most employees, and we've gone through a lot of this over the past couple of years with where some employers are only offering a high deductible plan. And then you really have to make sure or ensure that the employee understands how the whole plan works and make sure that they know that they need to save for it so that years down the line they don't have issues where they don't have enough money sitting there. And it really is a lot of just working with them, hand-holding, helping them to understand, because it is very different.
And isn't that where the relationship that we talk about with the community bank and with Simsbury Bank really does come into play too, is because there are so many questions, there's so much information, things are changing all the time. So to have that relationship and have those go-to people that can give you that comfort level when making a major decision. It may not sound like a lot of money to a lot of people, but it is.
It's a large portion of some people's monthly expenses. And Joe and I are working with one client right now where we've gone back even after they've signed up for it and offered more educational seminars just so that the employees understand better. They've been in it for 1 year or 9 months or whatever, and they want to be able to understand really how the program works now that they're in the throes of it. And we've gone back and done more seminars to help them understand, and I think it works.
And that really is an advantage of having a community bank, especially Simsbury Bank. They're so flexible and able to help us do that. Each of the carriers, all the 5 major carriers in the state, they have a preferred bank. It's a national bank. I don't get to see Anthem's preferred banking representative come to any of my employer sessions, where Terry or somebody from Simsbury Bank comes to every session if we want them to. So having that community relationship is very helpful for us and our clients.
Now, we talked about in the intro that this is HSAs are fairly new. It depends on how you define new. So is there any pullback from that standpoint? Is it really a proven product yet? Does it really work? Are there really realized benefits with it having been going on just a short time?
The industry's struggling a little bit with it. Initially, there was very large savings projected versus a copay-based plan. Those have come down. Those have narrowed a bit. We've also seen that the deductibles have increased. So, I talked that the 2,000, 4,000, the 2,500, 5,000 tend to be more popular now to help kind of drive the targeted savings. But in general, what the industry is seeing is that, yes, these plans are having an impact. And it kind of goes back to that personal accountability, that consumerism aspect. We've seen not only the lower premium base, but also that these plans tend to increase at a slightly lower level than a traditional copay plan would. So yeah, so far the industry is supporting it, although it has been readjusted a bit.
And is there any person too big or too small for an HSA? I mean, what does the spectrum look like?
Now we have customers who are self-employed who have a single HSA account. We have employers who have 1,000 employees, and we've gone and we've done those. So there really isn't any rationale behind someone being too big or too small to be able to get into an HSA account.
And what does the process look like? How cumbersome or is it to get signed up?
Well, first of all, you have to have a high deductible plan. So you go to your insurance broker and you make sure that you have the proper medical plan.
And we said again, the range is anywhere from like 1,000 to
minimum level has to be $1,250 for
$1,250.
Single, $2,500 for 2-person or family, and I haven't seen anything that low in
Right,
Connecticut.
Where can I get
but
one
that's
of
where
those?
right, exactly. It's a nice plan if you can get it right.
Right.
But then your premiums would also reflect
Correct.
it anyway,
Yeah.
so you have to weigh it. And then as far as the bank account, it's very simple to do. It's just like coming in and opening up a checking account or an IRA. Just have to get to know the customer and open up the account, and they get a checkbook, they get a debit card, they can access it by online banking, by doing bill payment. They can telephone banking, they can go to an ATM if they need to get cash to go pay for a prescription. So it's an easy product to use.
And what about accountability? I mean, how detailed is that so that you know that you're not using your ATM to go out to dinner and that it's really going towards healthcare costs?
That's when you ask about any concerns or pushbacks from individuals about the plan. That is probably the one concern that most individuals have, is that they are accountable for it. This is a tax advantage account, so if you're ever audited by the IRS and you have an HSA, the IRS is going to want you to prove what you spent your money on, that you didn't go out and buy a big screen TV or go on a cruise with that HSA money. So you have to keep your receipts in case you're ever audited.
Right. And the nice thing is, it is really your money. So if you did want to buy a flat screen TV or go on a cruise, you can do that.
Take the tax hit.
But if you're audited, you would get
Right.
taxed on those funds, plus you'd pay a 20% penalty.
Right.
So it's similar to taking money out of a 401k. You'd have a penalty and a tax. It's just that in this case, the penalty's larger. It's a 20% penalty.
So this has been around long enough, Terry, for you to probably hear from people about the benefits of having an HSA. What are some of the things that people, your Simsbury Bank customers, are saying to you about, the process after it's already, been in place for a while?
Many of them are very, very happy. They, especially if they're fortunate enough to have their funds grow. We have customers, we proactively contact customers who have large balances to see what their plans are and open up those laddered HSA CDs. And so many customers are very, very happy with the program. I mean, we have, they feel comfortable calling me, emailing me, calling me, asking me additional questions or any concerns they have. So I wouldn't say that. I would say that for the most part, 90% of the consumers who are in that program are very comfortable and understand the program.
And from the employer side, the employer side, it's very rare that we see membership decrease. So if you're offering an HSA and a copay plan, it's very rare we see people move back from the HSA back to the copay. We just see exponential increase in the HSA plan.
Do you think there's going to be other products that will roll off of this? I know it's kind of like looking into a crystal ball, but if it's working, what's next?
What we're starting to see now is how the plans get treated after the deductible's been met. So we're seeing some modifications on how those, what your cost shares might be after you reach the deductible. A lot of it will be dependent on federal government. So right now, in order to have an HSA account, you have to have certain criteria under your plan design. So we're somewhat limited to what we can do with HSAs because of the plan design limitations the IRS puts on us.
You two put together a great presentation here. So where can people contact you, or who's your audience, and where are you willing to go and speak about the benefits and the partnership between the two of you?
Well, if anyone has a question regarding the HSA accounts, they can certainly contact Simsbury Bank. We have 4 branches. I'm here in the head office of Simsbury, so they can contact me directly to find out more information. Your insurance broker or agent is your best, or your employer is your best option to check to see if they have the plan. Lindberg and Ripple, great company to work with. Actually, they're Simsbury Bank's plan provider.
Yes, we are.
And they do very well by us. Joe can tell you a little more about.
Yeah, we're located in Windsor, Connecticut. Our phone number is 860-731-5566.
And a website.
LRIbenefits.com. And we primarily work with employer-based plans, so we don't do a lot of individual insurance. So we would be more for either small employers or very large employers.
And what about being an advocate, though, for your employer to say, hey, I've heard about these things. Can we bring someone in to talk to us so that we understand fully what the advantages of an HSA are? I mean, do we have the right as employees to be advocates for that?
Sure, because it's a tax advantage account. Yeah. I mean, why wouldn't you want to provide a benefit to your employees so they can save taxes, and also the company can save taxes? So I think it's totally appropriate for an employee to ask their employer for it.
Yeah.
And what's in it for the bank other than establishing additional relationships?
It's growing the bank. We have a very large amount of HSAs in the bank right now and good balances in those. Plus, it helps us reach out to outside of our footprint. We have customers from the southern part of the state to the eastern part to the western part, all the way out to the New York border. And it gives us an opportunity to touch more people and build more relationships. We recently let a lot of HSA customers know that we have a great mortgage program, and we benefited from that, and they benefited from our great program. So it's just growing the bank and doing the right thing and building relationships.
Right, and I know at Simsbury Bank, your mortgage business is growing. You've grown into other states, and so it's just another product and another relationship-based product and advantage for the consumers out there. So definitely. It's great to hear that the mortgage business too is really booming and going well, and it just seems to be a perfect fit between buying a house, maybe starting a family, upgrading, moving into senior housing. What have I got in my nest egg in case of health issues?
Right.
So let me ask you this too then. So if, again, people want more information, and what do you want to say to maybe the individuals out there that won't necessarily come to you, but why it's important for them to look into these for themselves or small businesses?
Yeah, so everybody's aware of health reform right now, and the state of Connecticut has the marketplace, the exchange. I'm not sure if there's an HSA offering right now on the exchange. But as folks are looking at plans, and I expect that people are doing that now because the exchanges are open and running, they should.
That's questionable.
Yeah, in Connecticut they're doing a pretty good job. But as they're looking at those, they should consider as a consumer-directed health plan with an HSA a potential solution for me. And I would say that in most cases it should at least be looked at.
And there's got to be overall, over time, tax advantages that maybe some people haven't realized yet, but over the course of time, that's got to be a benefit. I mean, who likes to pay taxes on something they shouldn't be paying taxes on, right?
Definitely. And a lot of our customers, a number of our customers are using this as a tax advantage account. Not necessarily the insurance aspect of it, but they're capitalizing on the 60 to 50 and $650 to put into their account, and they're saving it for later use. They're not using it for medical costs right now because they can afford to pay out of pocket, but they're putting these pre-tax dollars in and saving them for down the line for retirement.
Right, and why wouldn't you do that, right? Why wouldn't you think about that? So it's whose idea was this, to add a health savings account to the other tax-deferred accounts that people are more knowledgeable or more used to?
It came from the industry and a little help from Congress, actually. There were medical savings accounts before HSAs, and these kind of built off of that. They became a lot more flexible. Probably around 2006 is when they really came out with a very flexible version of the HSA plan or a medical savings account plan. So it really came from the industry and from legislation.
Right, and I want to reiterate the point that you both made earlier in the program, if people are just tuning in, and that is that if you don't use it, you don't lose it. That it does roll over and it does accumulate over time, so that in the end, if you're fortunate enough not to have to tap into that, you at least know you've got another nest egg there.
Yeah. And it's yours to keep for life. If you leave your employment, if you change in types of insurance, that money is your money. So you don't have to spend it. You can keep it for later on, and it's a very flexible advantaged account. It's fantastic. I mean, I have one myself, and a lot of individuals are capitalizing on the aspects of why it's there.
Right, and that's why we're doing this program is to bring awareness and have a more longer discussion about what this really is all about, what HSAs are, the partnership between the two of you, and the fact that they're accessible. And it's really I hate these words, but it's a no-brainer.
Yeah, I mean, we tell people that, just like any portion of your financial plan, you should talk about your health insurance. And then if an HSA is appropriate, then that should definitely be part of your financial planning, because there's a tax advantage account that does build up over time.
Right.
If you're fortunate to use it.
Well, thank you. This was a great discussion.
Thank you.
Thank you.
To find out more about HSAs and this high-quality, affordable option in healthcare, you can call Simsbury Bank and Terry Boulton directly at 860-658-2265 or go to their website at simsburybank.com. Again, thanks to Terry Boulton from Simsbury Bank and Joe Spurgeon from Lindberg and Ripple for being on the program, and thanks to all of you for watching.
Funding for Simsbury Community Television is provided in part by contributions from viewers like you. Thank you.